First term, what we are going to learn today is about voucher. So what is a voucher? A document which provides the authorization to pay. So voucher is a document that provides the authorization or permission to pay. So usually if you see, vouchers look different, but more or less it has all the same information, but the firms, they prepare, or the companies, they prepare their own style of voucher with their own names, right? So it will look different, it will differ from one concern to the other. And also vouchers are prepared by the accountant, and each voucher is numbered and countersigned by an authorized person of the firm. So that gives the weightage of to the voucher. Okay, on the basis of which, that is on the basis of the voucher, transactions are recorded in the books of accounts. So it's a very important document with the help of which we will identify the transactions and record in the books of accounts. And also a separate voucher is prepared for each transaction. So when you take a voucher, it will represent only one transaction. So a separate voucher is prepared for each transaction. It also specifies the accounts to be credited or debited. So it makes the work of the accountant quite easier by even mentioning, the voucher will mention the accounts to be credited or debited. So hope you understand what's a voucher. A voucher is a document that provides the authorization to pay. It's a very important thing in a concern. Next, we are going to learn about capital. What is a capital? Capital refers to the amount invested by the proprietor in a business. So, who is a proprietor? Proprietor is the owner of the business, right? Okay, so capital refers to the amount invested by the owner. So, an amount may be in the form of cash, goods or assets. So a capital, there is no compulsion that it should be in cash. So it can be in the form of cash or goods or assets. So this is capital. So we will learn something in addition. What is that? For the firm, it is a liability towards the proprietor. So as we have I think you would not have learned you have to know this, that is, when you take a company or a concern, always it is separate from the proprietor. It has separate identity. A firm has a separate identity. So the capital is looked into as a liability towards the proprietor. Right, so the firm has it's like a firm has got a loan from the proprietor. It's liable, so the firm have to pay back to the proprietor. Also, goods and assets are purchased using this amount. So, using the capital, the needed goods and assets for the firm is purchased. So, in simple terms, to identify how much the capital exists, what we do, we add all the assets, and when we less the liabilities, we will get the capital. So, capital is equal to assets minus liabilities. So, capital, so the term capital is also known as owner's equity or net worth or net assets. So these terms will be used when we just move on in accounting. So instead of telling capital, it will be said owner's equity. So don't get panic. Owner's equity means capital. So if it is told net worth, it means capital. If it is said net assets, it is capital. Right? So with us, we'll move on to the next term. Assets, a very important term used in accounting. Assets. So what is an asset? Anything which is in the possession or is the property of a business enterprise, including the amounts due to it from others, is called an asset. Hope you can take in. So I have highlighted the keywords. Anything which is in the possession. So if you take up a firm, so anything it possesses can be called as an asset. Say it has a building, then that is an asset of the firm. Then is a property of a business enterprise. So anything specified as a property. Say it has a vehicle and it is said the business enterprise owns it. Then we can very well say that it is an asset of the firm, including the amounts due to it from others. Right? Even in a business, normally this happens. People take things in credit. So, they have to pay some amount, right, back. So, that amount due to the company from others is also called an asset. Hope you would have understood. So, let's see some example. Cash and bank balances. So cash and bank balance, what they have is a possession of the firm. So it is an asset. Stock. Stock means the goods remaining or kept with the firm. Stock. Furniture. Machinery. Land and building. Bills receivable. Money owing by debtors. So all these are called as assets. Now we are going to learn about the classification of assets. In assets, we have different classifications. So in accounting, as we look into everything very specifically, we need to know the different classification of assets. So let's see that. So first, classification is non-current asset. So under non-current asset, we have fixed assets. And fixed assets is further divided into tangible and intangible assets. First, let's see the classification. Later, one by one, in detail, we will see. Next is current assets, liquid assets, wasting assets, and fictitious or nominal assets. So, generally, it is divided into 5. So, let's see in detail one by one. First one is non-current assets. So these assets refer to those assets which are held for continued use in the business for the purpose of producing goods or services and are not meant for sale. So hope you can understand what is an asset. It is the possession which the company has, or it is a property which the company has, or if even the amount the company have to get back is also asset. That's what we learned, what is an asset. So here what we are seeing is that those assets which are held for continued use in the business. Okay, so there are some assets which are used in the business for producing goods and services, and it is not meant for sale. So those assets are called as non-current assets. Let's see some examples. Long-term investments and fixed assets. Long-term investments. What do you mean by long-term investment? See, for a firm to run, yes, we do business, we get profit, but still, for long run, the long run, at every point of time, they need money to be invested as capital. So what happens? They need money. So what they do, they take the profit, a small part of it, they put in some other banking institutions as investment. So from there, they will get some interest or dividends. So those we call it as long-term investments. So those long-term investments are called as non-current assets and also fixed asset. Hope you know what's a fixed asset. Fixed asset is like land and building, machinery, furniture, or all called as fixed assets. So fixed assets. When you talk about fixed assets, there are two types of fixed assets. First one is tangible assets. What do you mean by tangible assets? Those assets which can be seen and touched, right? You can see it and you can touch it. You can feel it. So that is those fixed assets are called as tangible assets. So which have physical existence. Like you can see which have a physical existence. So example, land and building, plant and machinery, right? Land and building, plant and machinery, computer, furniture, motor vehicles, etc. are called as tangible assets. Next is intangible assets. So what do you mean by intangible assets? Those assets which do not have a physical existence and cannot be seen or felt. So it is we cannot see. Then what is that? Let's see what is that asset. So with the example, you can understand in a better way. So example is goodwill. So what is goodwill? See, goodwill we cannot see, but see that is a reputation which which is gained over the years by a company. Say for example, if you take Colgate. Colgate is a company, right? So the name has gained a reputation among the people. So if you go and when they go to a shop, they prefer Colgate, right? So that is the reputation. So that we cannot see that, but it has a value. See, if the reputation fails, yes, surely the business will go down, right? Patents, copyrights, trademarks, these are all something which is related with the business. So these are all we cannot see, but those have values, right? So when we go to a shop, we are very specific, right? We look for trademarks. We see, okay, oh, this is a trademark, it's a crocodile t-shirt, right? So you prefer that. So these things have we cannot touch, but it is there. These things are there. So also computer software are all intangible assets. Next is current assets. So we are finished with non-current assets. Now we have come to current assets. Those assets which are meant for sale. We told non-current assets are not for sale, right? Only for production purposes. Only for the business purpose, what we are using, we call it as non-current assets. So what is current asset? Which is meant for sale or which the management would want to convert into cash within 1 year, right? So two things you have to see. If the asset is for sale, you can you can say it is a current asset. And also there are certain things, we'll see what are the things. There are certain things which can be converted into cash within 1 year. So those things are called as current assets. It is also termed as short-lived or active assets. Short-lived or active assets. And also known as floating assets or circulating assets. Because it will be easily converted into cash. It will be moving on, right? So it's also known as floating assets or circulating assets. So let's see the example. Debtors, stock, bills receivable, prepaid expense. These are all called as current assets. So why debtors we call? Because we have given in credit and they have to pay us the amount. So it happens within a year, right? Say for 3 months credit, for a 6 months credit, or for a short time it is given. So when we talk about bills receivable too, bills receivable are prepared for 3 months or 6 months. So we get the money. It is easily converted into cash. So these are called as current assets. Next is liquid assets. So what is a liquid asset? Those assets which are either in the form of cash or can be quickly converted into cash, right? Without any hindrance, immediately you can make it into cash. Such assets are called as liquid assets. So example, debtor, stock, bills receivable, short-term investments. So these are all you can just consider it as cash. It's easily converted into cash. Hence they are called as liquid. Next next is wasting assets. So what do we mean by wasting assets? Those assets which are consumed through being worked or used. So when we start using the assets, what happens? It is being completely used. So such assets are called as wasting assets. So mines, oil wells. If you see a mine, they'll be taking out the things. At a point of time, completely it will be finished off. So also oil wells, they'll be taking the oil. At a point of time, it will be completely nil. So such completely used or consumed, those assets are called as wasting assets. They also include patents, trademarks, leasehold properties. How it is? Usually patents are given for certain years, trademarks are given for certain, then they have to renew it, they have to go into a process. It's like leasehold properties. When we take for lease certain property, we take for certain years. So after that year, yes, it finishes. So these assets are called as wasting assets. The last one is fictitious or nominal assets. Fictitious or nominal assets. Assets which cannot be realized in cash. So you cannot realize it in cash. Those assets are called as fictitious assets. No further benefit can be derived from these assets. So some benefit we have derived. Now no further benefit can be derived from these assets. Example, debit balance of profit and loss account. What do you mean by debit balance of profit and loss account? Debit balance is always a loss, right? So loss made by the company. And unwritten advertisement expenses. Usually advertisement expenses are done prior to the incorporation of the business. So what happens then? Immediately we will not have any profit to write down this expense. So it will be taken along and slowly, part by part, we will reduce in the profit and loss account, right? So though these are all not we cannot actually say it as assets, but we consider these two things as assets and we deal with. So this is shown in the asset side of the balance sheet for the purpose of transferring them to the profit and loss account gradually over a period of time. So when there is profit, it is shown in the profit and loss account, and slowly it is reduced and brought to nil. So this is called as nominal or fictitious